In 2022, many countries are seeing slowing economic growth, but the UK in particular has been singled out by forecasters as having particularly weak growth. So in this video, we're going to ask whether the UK faces an economic crisis, also the reasons behind that, but it's not a foregone conclusion. There are certain things the government can do, for example, which would mitigate or even avoid a deep recession in the UK, and so we'll also consider those. So let's look at whether the UK faces an economic crisis in a bit more detail. Let's start by looking at what's happening to the UK economy right now. If we look at economic growth, that's what GDP is, and that's the total value of all goods and services produced in the UK. Like every other country, the UK's GDP fell sharply in 2020, but then it bounced back strongly afterwards, and it finally achieved the same level as it had just before the pandemic. But notice that recently that has been weakening, and we've had several monthly GDP prints which have been trending downwards. At the same time, inflation has been very high, even compared to other developed markets. So the May print for inflation in the UK was 9.1%, and that's the highest it's been for decades. One of the effects of economic weakness is that a currency devalues. And in the UK, despite interest rates being raised more quickly than the Federal Reserve, usually that makes a currency stronger, the UK has actually devalued very significantly against the dollar. So far this year, that's down by over 10%, and versus the Canadian dollar down by a comparable amount. In fact, the only developed market where there hasn't been a significant devaluation, where it's actually strengthened, is against the yen, where interest rates have effectively been kept at their zero lower bound. Now, this isn't a disaster for the UK. It makes our exports seem cheaper, so it's good for exporting companies, but it is exacerbating our inflation problem because we rely on imports for our food and also our energy, and a weakening value of sterling has made those imports more expensive. So there is a pass-through inflation effect here as well. So current economic data is not looking all that bad. It's when we look at the forecasts that things really start to look worrying. For example, here's the Bank of England's forecast growth from its May monetary policy report, and actual growth is shown here in red. That's the fall and the rise we've already seen, but the projection is this fan chart here from 2022 onwards. Notice how that very quickly slumps to zero, where it stays for several years. That goes all the way up to 2025. This is called a fan chart because there's also an upside and downside scenario. But notice how those are symmetrically placed around a central case of no growth, and that's for several years. And if we look at the Bank of England's inflation expectations, something you should know about given that's what it's trying to control, you can see that there was a gradual increase up until the May report. Since then, we've already gone almost to 10% for inflation, but they actually expect now that inflation is going to peak at around 11%, and that'll be towards the end of 2022. Then it'll gradually start to slow down in 2023, and by 2024, they think it's going to reach roughly their 2% target. Now notice there's no period of deflation, so all this really means is that prices will rise more quickly over the next few years, and then they won't come back down to where they were before. The OECD provides forecasts for every country in the OECD, and in its June outlook, this is what it looked like across the richest countries in the world. For 2022, the UK actually looks pretty good. It's only second behind Canada, and it's considerably higher growth forecast than for the US, for example. So 3.6% versus just 2.5% for the US. However, when we look at 2023, suddenly the UK goes to the bottom of the table, with growth of just 0%. Part of the reason for that is that UK inflation will remain high for longer than other regions. So in 2022, for example, at the end of the year, UK inflation is forecast to be 8.8%, which is much higher than other developed countries. The US, for example, is forecast to come down to just 7% by the end of this year. But then if we look at 2023, the UK forecast is 7.4%. Now, actually, if you look at the text of their report, they say it's 4.7, but either way, it would be the highest inflation amongst the richest countries in the world. In the UK, the Office for Budget Responsibility, which is there to stop the government spending too much, but to do that, it has to produce an economic forecast. Now, the trouble with the UK's economy is that it's very open. So if there are supply chain disruptions or energy supply problems or very high energy prices, we are a net energy importer and very sensitive to higher energy costs. So they split their forecasts amongst different scenarios. And that forecast combines gas prices and oil prices. They made a forecast in March of 2022, and they also have their latest forecast, which you can see is revised energy prices up slightly. The red line is above the black line. But they also consider two other scenarios, one in which there's a very short, sharp spike in energy prices, that's shown in orange here, but also a much more sustained, persistent energy price shock, that's shown in blue. So what they then do is take those forecasts and scenarios and turn it into a GDP forecast, that's economic growth, but also an inflation forecast. And that's what you can see below. So if we look at GDP, first of all, you can see if there's a temporary energy spike, we get GDP falling. So that's a recession. Then as the energy spike subsides, you can see economic growth accelerates and brings us back to this trend growth that we had previously. Now, potentially the more damaging scenario, because it's longer lasting, is if energy stays high for a long period of time. That's the blue line here. There you can see that we don't reach the previous trend for GDP, although the rate of GDP actually does recover. If we look at CPI inflation, you can see that the spike scenario sees inflation spike to around 11%, kind of like the Bank of England was saying. Then there's a period of deflation as prices fall, and the deflation is about -4% at its peak. Whereas in the sustained high energy price scenario, as the year-on-year change rolls out of the 12-month window, you can see that the CPI inflation comes back to 2% per year. But what this highlights is the importance of energy to the UK economy. Now, before we dig into the problems the UK faces and the potential solutions to those problems, let me just quickly mention our membership, where you can learn more about investing and economics, and you get access to lots of goodies like Slack membership. You can ask a question whenever you like, and also a growing library of members-only video content. To learn more about that, just click on the link beside me and in the description beneath me. Now let's dig into the problems which have caused those weak growth forecasts that we saw earlier. A big problem is the dependence on imported energy, and many of the sectors in the UK economy are very dependent on energy. The size of these bubbles tells you how big a sector is in adding value to GDP. So GVA stands for gross value add. So manufacturing, you can see, is still important for the UK economy, although not as important as services. But manufacturing, you can also see, is very dependent on energy. For every pound of gross value add which the manufacturing industry adds to the UK economy, it requires a lot of energy to do that. And if we look at transport and storage, that requires even more energy. Two other sectors which are also very energy intensive, but which add less to the economy, are mining and agriculture. Now, fortunately, a lot of the UK economy is service-based, and there the energy intensity is much lower. But if we are going to be hit with sustained high energy prices, it's these sectors of the economy which will matter most, and which will have the biggest negative impacts. If we look at the total consumption of energy in the UK, you can see a fall since the mid-2000s, but it isn't huge. What really has changed is the composition of the sources of energy. Coal, which is at the bottom of the graph here in green, has become much less important. Petrol's remained about as important. What's really made up the difference has been natural gas. Now, in order to be more energy independent, we'll need to ramp up our renewables, which we can generate here in the UK, either via wind power, but also to a lesser extent from solar energy, but also tidal energy. And another source which is shown here is bioenergy and waste. But you can see that those renewables and bioenergy currently make up a very small percentage of our total energy inputs. Then if we look at the demand for energy from different sources, which is what you can see in this panel, again, there hasn't been a huge shift in energy consumption, but what we can see is a change in composition again. So industry is less important as manufacturing has gradually faded as a proportion of GDP, but what's increased has been the amount of energy required for transport. That's the yellow bars here. And domestic energy use has also increased slightly over that period of time. So given the huge increase in energy prices, you can see that the composition of our energy production means that we've had to pay a lot in order to get that energy into the country. If renewables played a larger part in our energy production, that wouldn't be a problem. Now, one of the solutions which the government's come up with is to give people money so that they can afford to pay their energy bills, which have gone up hugely over the course of this year. That's called fiscal support when the government has handouts for households. However, as the OBR says, and it's their job to be careful about government expenditure, this merely pushes the cost of higher energy onto future households rather than households today. That's politically expedient, but it may not be expedient for our children. And they go on to say that the government cannot make the costs of more expensive energy go away. All it can do is adjust who pays it and when. The real solution here is to have more domestically generated renewable energy. The OBR also points out that Brexit is going to be a headwind for UK growth. On this graph beside me, you can see the UK's largest trading partners, where the size of the bubble shows you the percentage of UK trade with that counterparty. Notice how the biggest bubble is the EU, which makes up 46% of UK trade. Now that we're not part of the EU, we can go and make independent trade deals with any country in the world. However, so far, the trade deals that we've made have been with Australia and New Zealand, and those combined only make up 1.4% of our trade. And the OBR points out that the trade deals so far have only added about 0.1% to GDP by 2035, whereas the loss of GDP due to Brexit is roughly minus 4% over that period. So unless we make a lot of trade deals quite quickly, there's going to be a cost to the UK in terms of growth. The UK has also announced recently that it may tear up the Northern Ireland Protocol, where it has to check goods which are shipped to Northern Ireland, because that has a border with the EU. It was the responsibility of the UK to check any exports which went to Northern Ireland before they were sent there. However, the UK says it's not going to do that anymore, in which case the EU will probably respond by taking legal action against the UK, and potentially this could also create a trade war between the EU and the UK. That in turn would increase the import costs to the UK and create more supply chain disruptions. That would increase inflation and reduce growth. At the same time as we have all these economic problems, we also have political instability, as Boris Johnson has resigned and the Conservative Party is trying to elect a new leader. So whatever the UK's policy is will be determined to some extent by this unknown factor. And certainly at the moment, it's only Rishi Sunak who's talking about fiscal austerity or carefulness, who's saying that he's not going to lower corporation taxes. That's because he's quite keen on balancing the books and restoring the UK's debt to something which is more sustainable. And here you can see a joke from Katie Martin, who says all the candidates will be promising to end taxes altogether by Wednesday. But whoever takes over as UK Prime Minister and Chancellor is going to have their problems cut out for them, particularly given the high rate of inflation and the weak expected growth that comes with it. So this is precisely why I'm worried about the UK economy and why I think we probably will see an economic crisis. I don't think the politicians are willing to make the difficult decisions it requires in order to get the economy back on an even keel. Now let's think about the solutions to those problems. In this graph, you can see the fiscal balance for the UK. That's how much we spend over how much we earn in taxes, and it's usually negative, and we plug the difference with newly issued debt. During 2020, we shook the magic money tree and we issued a lot of debt to pay for the furlough schemes and to mitigate the effect of the pandemic on the UK economy. And that was on the whole pretty successful. Since then, we've been dialing back that expenditure, and the forecast is that for 2022 and 2023, that tightening will continue. Now, any kind of fiscal tightening is generally a negative for the economy. If you suddenly switch from largesse to austerity, that could have a huge negative effect on the economy. So that's going to be a very difficult balancing act on the part of the government. At the same time, the Bank of England has to raise interest rates to get inflation under control and to avoid a price-wage spiral. And that's exactly what it's been doing. So here you can see the bank rate, that's its policy rate, which has been increasing very rapidly. And there are no signs that it's really backing down from those very rapid rate increases. Now, that's also tightening policy in the UK, which also has a dampening effect on growth. So somehow the government's going to have to work hand in hand with the Bank of England not to crash the economy. So what are the solutions then? Well, part of it has to be fiscal policy, how much the government spends on infrastructure, on education. There'll be a temptation for a newly elected prime minister to hand out money to the populace in order to gain popularity. Now, that would be inflationary and it would probably exacerbate the problems we've got right now. Perhaps it would be in the form of support for vulnerable households who are facing very high energy costs. But it should certainly include things such as spending to support productivity. What kind of spending would do that? Well, it would require government programs, for example, to ensure that people are confident that this move to net zero is going to happen. What's really awful is when you promise something and then take subsidies away. And the reason why that's important, albeit expensive, is that it will reduce our dependence on fossil fuels in future. So this kind of crisis won't be as bad when it happens again, because you can bet energy prices will spike in future. Now, typically, if you want to stimulate growth, you spend on infrastructure. Now, that would be things like better rail networks, better road networks, better broadband, particularly in rural areas, which are very underserved in the UK. Another really important component of GDP is because our population's not growing much, is that each person produces more in terms of income. By educating people, you ensure that they generate more income, and that feeds into gross domestic product. However, this government is not particularly keen on spending on any of these things. Instead, it's looking for private financing usually to fund them. And I'm not sure that's going to work particularly well. In conclusion, then, I believe that the UK is entering an economic crisis. It's unlikely that we're going to see energy prices come down rapidly, and we're facing a period of political uncertainty. And I'm not convinced that the politicians who are going to take over are the kind of politicians who can solve the problems we face. Now, if, as I expect, politicians don't make the right decisions, then we're going to face a potential stagflationary period when we have either a recession or certainly low growth for an extended period of time combined with high inflation. Now, if that's the case, it's probably the worst possible economic outcome for the UK. Low GDP means that we have less job security, smaller wage growth, at the same time as we have very high inflation increasing the cost of daily living. And as we've seen already, that has a negative effect on the UK currency. So if UK growth does lag the rest of the world, as many people expect, that means that sterling would continue weakening versus the dollar and other developed market currencies. The answer is yes, I do think we're entering a period of economic crisis in the UK, and I haven't been convinced by any of the policies I've heard so far that these will address the fundamental problems we face. Now, it's not all bad for UK investors, remember, because if sterling does weaken, it increases the value of our foreign investments. And also, don't forget our offer. You can go to PensionCraft.com to join our membership, and you can learn about that by clicking on the link beside me and in the description beneath me. And as always, thank you for listening.